Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street and also get you insights from the top market experts on the markets as well. 24,372 right now for the Nifty. So we are off the low point, but we've been very choppy throughout the course of the session as well. We pulled off from the day's lowest point, but even now, if you see, there are many pockets that continue to reel under pressure. Consumer durables, pharma, realty, metals, FMCG. Even the mid caps are down in the red, but what's pulled up and recovered from the day's losses are IT, banks, clearly auto space as well, and some bit of small caps that are also holding up in trade. Top movers on the Nifty include names like Adani Ports post earnings, Bajaj Finance, IndusInd Bank, Maruti Suzuki, SBI. These are the pockets that are actually doing well on the Nifty top movers. On the declining end, however, you have JSW Steel, Bajaj Auto, Eicher Motors, Nestle, Hito Moto, all of these pockets that are still lower in trade. Real estate is definitely improving with some stocks in the F&O space like Godrej Properties up and about in trade. You have Sona BLW from the auto ancillary space. And of course, PNB Housing Finance with that block deal coming in as some of the stocks that are holding up in trade. But let's welcome our guest on board, Mr. Abhishek Basu Malik, the co-founder and fund manager at Sri Rama Managers PMS, is now joining in on the program with us. Warm welcome to you, Mr. Basu Malik, and thank you so much for taking the time out. Well, first to understand the current situation in the markets, on the tariff front that we talked about last time around, there is some softness. We are seeing some cool off happening on that front, so that's good news. But closer home, there are geopolitical tensions that are now further rising. How do you expect the markets to really trade and retail investors to approach their investments when there is so much moving and there is so much uncertainty on the geopolitical front, sir?
So, first of all, very good afternoon to you and all your viewers. So, I think, like we discussed last week, this is going to be a market where there is going to be choppiness in the near term. The only hope and expectation that I have is over the next couple of months, the rate of change of the news flow in geopolitics is going to slow down. The number of world-changing tweets by the US president is going to come down, and we are going to see some kind of some semblance of stability back in on the geopolitical front. The moment you have that, especially from the US side, so the tariff part gets sort of taken care of. Businesses will adapt. So it's not the first time that tariffs have been put on countries on goods. So businesses will adapt. It will take some time, but there'll be one-time sort of shifts, revaluations for the tariff part. The new thing that is happening is the India-Pakistan situation that could have, a sudden outcome. Some news flow that can come, which can create some sort of either euphoria or panic in the markets. Very difficult to gauge the timing, the duration, the intensity of such kind of news flow. But what I would always suggest to your viewers, and I keep reminding myself also of that, is in hindsight, after a few years, you'll always look back and feel that those were the times when we would have been better off investing in the markets, right? When there is a lot of uncertainty, when there are a lot of fears going around, because that is when you get reasonably good businesses at maybe cheap or reasonable valuations. When there is exuberance, when everybody is gung-ho about the future, that is when your opportunities get lesser and lesser. So, for somebody who wishes to invest and create wealth over the next 10, 15, 20 years, now would be a good time to invest actually in the markets over the next, I'm not saying now as in today, tomorrow, I'm saying, say, over the next month, 2 months, 3 months, is actually going to be a good time to invest in the markets.
Okay. How would you really explain, sir, from the last couple of days, we are seeing a few trends. One, mutual funds cash kitty has brought out this fact that the cash kitty has hit a 15-year high. So, what would that mean for investors? We've also seen ace investors like Mark Mobius talk about how 95% of his portfolio is in cash right now. Why do you think investors are now holding on to cash, and what should retail investors at large take in from such indications coming in?
So, see, whenever you're talking about institutions like mutual funds, one is they continuously keep getting inflows, right? And it's not always very easy to deploy inflows on day one. That is one. Second is, I think, even mutual fund managers are also a little bit uh, in the boat where they're also not sure where, how the near term is going to look like. So that is, I think, one reason why people are sort of sitting slightly on cash or maybe 10, 15, 20%. I don't think mutual funds are holding much more than that in cash.
Okay. Also, help us understand, the key triggers that we are looking at every day is the earnings flow that's coming in. What has stood out for you so far from the earnings that have come in, sir? Anything as a trend that you'd like to probably carry on?
The first thing is the earnings are not as bad as was broadly expected. I think most of the numbers that are coming are reasonably in line. I mean, there is between 8 to 12, 13% growth at an aggregate level, which is good. I mean, I think people were expecting much worse results. I think a lot of companies are putting out good results. Interestingly, because the market has been in a sort of bearish phase over the last 6 months or more than that, from September, October onwards, valuations for a lot of these stocks have come off. So now we are probably getting much better value for companies. When I talk to managements across the board, I think I hear a lot more of optimism. I don't see the bearishness in management commentary that we can hear from analysts on the street. So I think that is a very important thing that we need to understand, that the actual businesses are not doing badly. We are in a period of geopolitical turmoil. These periods tend to happen once in every 3, 4, 5 years. If you start looking back, you will
Yeah.
see every 3 years, there's something or the other which happens. 3 years back, it was Russia, Ukraine starting to fight. Then uh, before that, it was COVID. Then you had something, something else, some or the other, macro event keeps happening every 2, 3 years. We get a 10, 15, 20% fall. And in hindsight, all of those uh, points are have been very, very good points to enter if you have a 3 to 5 year plus horizon.
Now, if I have to ask you, sir, the space that we were looking at, auto space, which has come out with the sales figures as well, a lot is happening there. There are mergers, acquisitions also taking place. We saw what happened with M&M, SML, Isuzu. What we've also seen is that a long period of consolidation has come in for the likes of, say, Bajaj Auto or for a Tata Motors, for instance. These stocks have consolidated for a fairly long time. What are the trends that you've picked up from the auto sales that have come in now, and how relief from the auto tariffs that we could now expect as initial signs that are coming in? How would all of these augur for the auto space, sir?
Yeah, I think autos in India, again, like we were discussing last week, uh, India, the discretionary spending basket has changed
Yes.
from staples. So you'll see, if you look at the results from the FMCG companies, you will see that the growth is very tepid, right? But if you look at, say, the auto growth, you look at two wheelers, you look at all the other spaces where people are spending more money, you will find that the growth is significant, right? So the fact is that people are now choosing to buy a motorbike rather than spending more on FMCG. They're willing to upgrade. So you look at Eicher Motors as just an example, not a recommendation by any thing. if you look at Eicher Motors, you look at the high-end motorcycles that they've come up with, and there is a market. Although the market is niche, but it is there, and it is, people are upgrading. Similarly, at every all kinds of vehicles. You look at passenger cars, sales of SUVs, and in terms of ancillaries, people who are making sunroofs, right? So, 10, 15 years back, how many cars in India had sunroofs? Versus look at it today, how many new cars have sunroofs? So
Yeah.
the preference of people are changing. So I think, we should not broad brush and say that, autos are going to do well. I think within autos, we need to understand who is, playing in what niche. So you took the example of M&M, right? So
Yeah.
M&M is getting more focused on SUVs. They were always focused on SUVs, but now with their EVs, they're targeting a niche segment within the EVs. They're not going down the mini SUV segment that maybe a Tata Motors is trying to get into, or Tata Motors is sort of the major player there, with their Tata Punch, Nexon, etc. Whereas M&M is trying to get into the more niche space. So everybody is trying to sort of jostle for their own market share space within each of their categories. And I think personally, if you ask me, I'm very, very bullish for India over the next 5 to 10 years. And all of these companies, especially ones who are doing something different, who are bringing value to the table, all of them are, in my expectation, they should do extremely well.
Okay, so that's as far as the auto space is concerned. Let's discuss banks as another pocket which is a heavy weight. Many earnings have come in. We've seen, many large cap private sector banks hitting 52-week highs, scaling to newer highs as well. And we've seen how the earnings support has come in, how the stock market performance support has come in for the Nifty from the banks and the financial space as well. There are announcements of big bonuses, splits happening there in the NBFC space too. How are you looking at afresh this space? Any key, strategies on the stocks which have already hit a 52-week high? Do you still feel confident of looking at this?
See, I think hitting a 52-week high is not a big deal because, like I say, I mean, if a stock has to go from 100 to 1,000,
Yeah.
it will hit 52-week highs pretty often. So that's not the thing that we should be looking at. I think looking at the business of banking, there's a lot of competition, a lot of players like the private players, top ones, and the larger PSUs are all again fighting for space. I think overall there is a tailwind because we are now in a reducing interest rate regime. So that is giving a fillip to the banking sector. Uh, so, I mean, short-term expectation is that the banking sector should do well. Long-term, I'm a little bit more circumspect on banking. Uh, over the next 5 to 10 years, I think banking may not give the kind of returns that it has given in the say last 10, 15 years.
Okay. And between the private PSUs, financials, where would you actually put in more concentration on, sir?
I would always prefer the large private banks, the
Okay.
large PSU banks, and even some of these very niche housing finance banks, housing finance NBFCs,
Okay.
those kinds. But overall,
Okay.
the space looks good.
Okay. How about the IT space, sir? What's your fresh perspective here? Most of the heavyweights are now out with the earnings. Even some of the mid cap names are out with the earnings as well. Any trend that you've picked out?
So interestingly, I thought that the IT results were not as bad as I was
Yeah.
expecting it to be. Right, especially some of the companies, especially those who are not in the services space. So, companies like a Persistent or a KPIT, they've actually come out with reasonably decent kind of numbers.
Yes.
So it gives me some kind of hope that uh, you know, see, IT is going to be required forever, no matter, just the foundational technology is not enough. Just having AI is not going to help you. That you have to take that AI and put it to use. right? By common people, by your customers. So you have to integrate them into your workflows. So that is the commercialization that will happen. A lot of work will come to these IT companies. The question is, that trade-off is how much of AI is going to disrupt their business model, because primarily our IT services business is uh, uh, a headcount-led business, headcount into dollar rates. That's the business that most of these IT companies, service companies are in, and that is going to get disrupted because uh, the headcount is going to reduce. So that is going to be the major challenge. But the demand is going to be there. Uh, there might be some weakness in the near term because US is either in a recession or is going to go into a recession, or in semi-recession, whatever way you look at it.
Correct.
Uh, the only again silver lining in that is if Europe starts picking up. But again, the skew of the IT services companies is very much towards US as a customer base. So there is some amount of pain that I think is going to be there in the IT services space for a while, at least another quarter or two.
Okay, another quarter or two of pain that could continue to persist. We'll definitely keep an eye out on that. How about the fresh move in some PSU spaces, sir, like defense, for instance? Some railway stocks also earnings have been promising at some places too. How would you approach fresh after this recent move that has come in over the last 1 week, 10 days odd on the defense and railway names, sir?
The defense, obviously, right now, looking at the situation across the world, not only India, I think
Yeah.
it's a no-brainer. In the sense that if you look at announcements coming out of Europe, if I remember correctly, I might be getting this number a little bit off. Either 23 or 27, countries within Europe, in small countries, they have actually uh, given a target of uh, nearly doubling their defense spend from wherever they are today, right? That is a big number. You look at India, you look at all these major countries, everybody is going to spend on defense. So now how much of it will flow through to our listed defense players is a open question. But I think demand is suddenly going, or demand is going to go up significantly over the next, say, 5-10 years, because there is a shift in geopolitics which is happening, uh, and everybody would want to sort of shore up their own defenses. So defense spending is definitely going to go up. So it's a long-term theme. Defense is not something that you will sort of trade in and out. It's a longer-term theme. Railways, you asked. I think railways again is one area where the government has been very focused on. I think even yesterday or day before, I saw some Kavach orders being released. So this is again a very continuous process. I think in a country like India, I love traveling on the train, uh,
Yes.
and the problem is that today uh, we severely lack capacity, right? I mean, you have to book a train months in advance. There are multiple things related to railways. So one, increasing capacity, increasing the safety, improving, the quality of coaches. So all of these things are actually happening parallelly, right? So and the other also very important thing which I sort of missed now is a lot of these cities are going for metro railway development, right? So that is also huge. So overall, I think the entire railway space again is a secular theme. It might, a few months here or there, things can go up and down, but as a secular theme, this is one area which the government has, sort of said very clearly that they are going to spend money on.
Okay, so that's as far as the defense and the railway names are also concerned. Let me also ask you about a few more pockets before I come to something interesting for all our viewers to really find out. The other space is, the commodity space, oil and gas, metals, for instance. How are you looking at these baskets currently? A lot depends on what is going to happen in the new world order globally and how demand will shape up. The crude oil prices have been ebbing lower. What does it mean for Indian retail investors having exposure to both upstream and downstream names? And of course, metals. There is again a lot of dichotomy in the way the views are shaping up. How are you looking at these two baskets, sir?
Both are extremely difficult to gauge because too much news driven, and primarily both are supply demand driven, so very little question of business quality here. So very difficult to have a view on some things which is primarily driven by global events and news flow. So honestly speaking, I don't have a view on either oil and gas or metals. Metals, I think China is pretty much the biggest producer of most of these industrial metals. I don't know what will happen if Chinese production or Chinese economy sort of stagnates, which is most likely is going to happen if they are in a trading war with US. Uh, so will the Chinese companies, say steel companies, will they continue to produce and dump it across the world? How will the other countries react? Will they put up tariffs, etc.? So it's a very complicated, kind of a scenario which is very difficult to predict. So I would rather, not uh, sort of get into those kinds of problematic investments. There are so many other things to buy. Why get into something which is so difficult to sort of understand and execute?
Okay, avoid the complexity and look at where there is absolute clarity for you to give a better opportunity to make money in the markets. Let me also ask you on, since we're talking about commodities and metals, the precious metals, the way gold and silver has rallied, there is still a lot of, FOMO happening among investors. Investors still want to invest at these high levels in both gold and silver, looking at the outperformance of the past and expecting that in the current geopolitical volatility that we are seeing, gold or silver could continue to probably give better returns. What is your view, sir? At this stage in time, would you bet big on equities or would you bet big on gold and silver, sir?
I would obviously bet big on equities, because obviously most of the big up move in gold, etc., is over. And if you again look at the up moves in gold, you will see that it moves once in every 4 or 5 years and then it stagnates for a long time.
Yes.
I'm not thinking that the central banks are the biggest buyers of gold. They will continue to probably do so, but maybe the pace of buying will reduce to an extent. I think a lot of these central banks have got a reasonable amount of gold reserves. Incrementally, do you want to keep adding to that, or do you want to spend more on productive assets, etc.? So that's a different discussion. And uh, I think incrementally you are better off to put money in equities at these kinds of valuations in these kinds of uncertain markets. If you have a 3 to 5 year horizon, I think equities will do much better, in the next 5 years than gold or silver.
Okay, equity is likely to do much better than gold or silver over the next 5 years. So keep an eye out on equities at this point in time. Mr. Basu Malik, we were running through your own Twitter feed and we saw that you were in company of the best of equity masters just about a day or so ago. And we see a lot of interesting people on your feed, Mr. Ramesh Samani, Govind Parekh, and many others who are on that feed. There was a lunch that you attended. Tell us what was the conversation on that table like and what did you focus on?
I mean, we were lucky that such stalwarts were there in the city. We got to share, sit across and more learn from them. Not I would not say share ideas, but more learn from them, get their views. And the most important takeaway, I think, is that all of them are very, very bullish long term on India. I think you know, everyone believes that the India, opportunity is going to be very, very large, and these kinds of hiccups or that we've seen in the markets, these are part and parcel of equity investing. There is this is the price you pay for admission, right? So you're getting in, you have to pay the price, and only then you get the rewards. So that's the way to look at it. I think that was the main and key takeaway. I think one statement by Govind Parekh, I've noted it down. He said, we are like students in school. Every year we learn something, we make mistakes, we give exams, and either we pass or we fail, and mostly we learn something, and next year we try to do better. So that is, I think, coming from people like them, who've spent decades in the markets, been so accomplished. The fact that, even after 40-50 years of being in the markets, you sort of have this spirit of learning every year, every moment. That, I think, is the ethos of being a good investor.
So, Mr. Basu Malik, was there, no sign, and of course that's a sign of maturity and having seen so much in the markets and so many cycles, was there no sign of any worry on account of the geopolitical tensions that we are seeing, or the changing policies across the US? Were these, of course, insightful discussions only pointed towards what we could be seeing in the Indian markets and the growth that we could be seeing it over next 5-10 years? And is that how retail investors should also be thinking about their
So
portfolios?
I would,
Yeah.
sorry, I mean, I would think so. I mean, see, if you are investing your own money, if you have a long-term horizon, why? I mean, we've had how many wars with Pakistan, how many border skirmishes. I'm not, trying to trivialize this, but I'm saying that from a market perspective, we've seen this multiple times before. So it's not something that we should be overly worried about. It's something that concerns all of us as citizens, as individuals. But from a market perspective, it is something that, if it happens, it happens. And does it have a very long-term impact to the businesses that we are owning? That is something that we have to evaluate when the time comes. I don't think we should be overly worried about any one specific incident, whether it is Indo-Pak situation or whether it's US tariffs. None of these things are actually going to make a huge difference to the way businesses are businesses operate. Whatever is going to happen is going to take time, and you will get chances to sort of realign your investments based on the updated information from the business. I think the most important thing for all of us to realize is we invest in businesses. That's where we should be focusing on. Otherwise, every day, every year, every month, every year, you will find something to be always worried about, right? So, there's no end to macro events scaring you and worrying you out and getting you out of your portfolio.
It's a great insight, Mr. Basu Malik. Thank you so much for being with us on the program today and sharing us with all our viewers and insight from that fantastic luncheon of yours. And of course, on the other hand, all the market points that you've discussed and decoded for all our viewers. Always a pleasure to speak to you and listen to your wonderful insights, sir. Thank you so much. Appreciate your time.
Thanks, man.
All right, viewers, we'll start wrapping up the trade now. 2 minutes to go before we shut shop. Remember, it's been a very, very choppy session at large. 24,316 for the Nifty. 0.07% of a cut is what you have seen. Oil and gas, PSU banks, IT, financial services hold up in this muted setup of trade. Several stocks that continue to shine bright. In the broader markets, there are many other names that actually shot through the roof even today. Zodiac Clothing, for instance, 20% circuit on that one. You had names like Force Motors, 12% higher. Very strong surge on that one. Names like Iris Clothings, a lot of those retail giants perhaps up and about in trade. Voltamp Transformers, Timken India, Railtel, Credit Access Grameen, Moil, Go Fashion, Jubilant in Grivia. These were the stocks that were rallying 6 to 8 to 10% higher in the broadest index. The Nifty Next 50, you had even DLF, IOC, Interglobe Aviation, that's another one that was higher in trade, TVS Motor after the auto sales figures, Info Edge, Macrotech Developers, a whole host of these names also that were buzzing. Then within the Nifty, of course, you had those few stocks that were up, Adani Ports, Bajaj Finance, IndusInd Bank, SBI, Reliance Industries also continued to show its support. Throughout this week, Reliance has been a big mover in the markets today. And but still, a large part of the market still on a muted to a lower end. 6% losses for JSW Steel on that news flow that's coming in. Bajaj Auto, Eicher, Nestle, Hero Moto, HDFC Life. These were the pockets that were top tracks. But we've shut shop, albeit above 24,312. That's a silver lining for us. We've not slipped below that level for a long time. We have actually held on to that gain. But remember, we opened in the pre-open trade above 24,600 and thereabouts. But of course, there was some mild move. We did cross even 24,500. After a long haul, many months today in the intraday trade. But again, we've given up that crucial level. Let's hope things continue to be on the positive stance so that when we open next week, we can again look at higher highs and some more opportunities to really look at. We'll leave you at that, viewers. Do stay tuned with us on Business Today Television as we continue to decode for you all the news developments that are happening in the world of business and economics. Stay tuned.
India is now amongst the world's most populous nation. Soon our economy will become the third largest